Well, on to the Reserve Bank now, which has certainly been the centre of attention this week, following strong criticism by former Prime Minister Paul Keating. Peter Tulip, who has recently joined the Free Market Centre for Independent Studies, well, he worked at the Reserve Bank for almost a decade, and before that, the Federal Reserve in the US and the Treasury in Canberra. Well, I interviewed him just earlier, and I began by asking him what he made of Paul Keating's extraordinary spray at the Reserve Bank, which was in effect a demand that it create money out of thin air to fund the government's budget deficits.
So I agree with a lot of what Paul Keating said. I think the Reserve Bank has been too cautious. It's been too timid. I think Paul Keating used the word indolent. The Reserve Bank hasn't been meeting its targets. It should be doing more.
Well, look, of course, there was no comment from the Reserve Bank, naturally enough. But do you think that there'd be many people within the RBA that would also have agreed with Mr Keating's remarks?
So I don't want to betray confidences. As you may know, I left the Reserve Bank just a month or two ago. But I will say that the Reserve Bank tries to be eclectic and have a diversity of views. So the range of views that you see reflected within the economics profession will also be reflected within the Reserve Bank. And that's a good thing. That's what you would hope for.
Well, Mr Keating was also very critical of the culture of the RBA. He basically likened it to a religious institution almost. Now, you've worked there almost a decade. You've worked at the Federal Reserve, I understand, before that for more than a decade, and then earlier on in your career at the Treasury. So how does the Reserve Bank's culture compare to other institutions from your point of view? Right.
So it is interesting the way central banks do have their own culture and character and personality even. The Reserve Bank of Australia tends to be more cautious than other central banks. It tends to be less experimental. It adopts fads after other central banks have tried them and they've worked. The Reserve Bank is less interested in research and less interested in formal modelling than other central banks.
Okay, and what do you think might cause that?
I think, well, that's a very good question. I think one big thing is the makeup of the board. So that the Reserve Bank board, most of the members don't have formal training in economics and certainly don't have a background in monetary policy. And that has an effect on the extent to which the bank is interested in technical modelling, and it reflects, and it gets back to what we were saying before about the bank's timidity and caution. Because they aren't as confident of what they're doing, they tend to move slowly and cautiously.
Well, just in terms of policy, the Deputy Governor, I think this week flagged the possibility of a further cut in the cash rate from 0.25 to probably 0.1. What sort of impact do you think that would have on the economy?
I'm not actually sure what they mean by that. That the cash rate in the markets is actually around 13 basis points. And when they say that they've got this target of 25 basis points, what is that? What they're doing is stopping having this phony 25 basis point target and actually adopting what is out there in the markets, which is about, I think 13 basis points was last I looked. So it seems a presentational change.
Well, look, one of the other things he flagged, I think, was negative interest rates. So far, it's seemed the RBA is very reluctant to go down that path, unlike other central banks in Europe. I understand you're more in favour of that path. What sort of impact do you think negative rates would have here in Australia?
I think the research... Now, Guy Debelle said that the research on negative interest rates is mixed. I think that's true. But if he was being truly candid and open with people, he would note that the weight of the research is that negative interest rates work. So there have been surveys of this by the BIS, by the ECB, by the IMF. They all conclude that the weight of evidence suggests that negative interest rates admittedly have some side effects, but overall they're good for your main objectives of stabilising inflation and full employment.
Now, the Reserve Bank has arguably missed its inflation target for some years now, and it's it's in good company there, I guess. Many central banks around the world have also missed their inflation targets. Doesn't that mean that central banks aren't as powerful to affect inflation as they thought?
That is argued, yes. I mean, that's true when you hit the zero bound. When interest rates go to zero, that your main instrument ceases to work the way you want it to. But this is a long-standing problem for the Reserve Bank. That it's now been missing its targets for 5 or so years. Unemployment has also been above our estimate of full employment for a similar length of period. The bank is just not meeting the objectives that Parliament has set for it.
Let's turn now to a different topic. And this week, the Treasurer said that the government was planning to tear up a big chunk of Kevin Rudd's responsible lending laws, which were introduced, I think, in 2009. Do you think that's a wise move for the economy?
I think that's a great thing. That a loan should be mutually agreed between a borrower and a lender. The government has a responsibility for ensuring stability of the banking system and for ensuring that people are well informed. It doesn't have a responsibility to meddle in mutually advantageous trades. If a borrower and a lender are both happy with the loan, then ASIC and APRA should stick their noses out of it.
And just finally, Peter, let's talk about the budget, which of course is on Tuesday week. It's going to be the largest deficit basically since at least the Second World War. Firstly, should the government be concerned about the size of the deficit? And secondly, what would you do if you were Treasurer, if you like?
The overwhelming objectives should be to get the unemployment rate down. And there are other things that a budget needs to worry about, like the deficit, borrowing, debt, issues like that. They're unimportant relative to the primary objective of getting the unemployment rate down. What I would do to achieve that is I'd cut taxes, and in particular, the tax cuts that are currently legislated for the next few years, I'd bring them forward. They've already been debated and decided upon. All that we need to change is the timing. Do it now.
And so by that, you mean the 2024 tax cuts, I imagine, not just the 2022 ones?
Correct, both the stage 2 and stage 3.
OK, Peter Tulip, thank you so much for your time today.
Thanks, Adam.
Well, that was Peter Tulip there from the CIS. Well,